All right. Hi, everybody. Let's try it one more time here. This is for real. I did a sound check a minute ago. We are all set to go. It's 5 o'clock. I like to try to start on time. I know sometimes people have a hard time making it here at 5, especially if you're out on the West Coast. I'll occasionally do one a little bit later, but since they're recorded, I don't think it's a real big deal. Hi, guys. Talking. All right. Welcome to tonight. I haven't done one of these in, gosh, a couple of months, I guess. I've been busy. I like to get out here a little more often and try and get some good information to you guys the best that I can. I've been accused of doing something almost good, I guess. It's kind of the reverse. I don't usually talk salesy very much. I just come on and try and talk about techno analysis and help you guys with stuff because that's just what I'm kind of doing, out having fun. But there are a couple things I will point out. I've had some people get mad at me because I had some events that didn't even know I was holding them. There is a lot of free stuff for you at DTS. That's what the slide up there is about. If you go to the home page, and if you take a look on the left side, there's something called free stuff. And let me get the link there for you. And if you go there, there are a bunch of educational videos. Here. If you go there are a bunch of recordings like from tonight. The recording from tonight will end up down there under prior events, oldest to newest. There are some downloads for you, just some fun tools you can use. There's a couple articles. I'll probably add some more articles to that. And I've been adding videos besides the recordings of webinars, which are all educational webinars. There's no salesy stuff. There's some miscellaneous videos in there, a bookmark on the market, market letter review day, trader day, total preparation, recording of the room one morning. And then there's some educational videos, controlling slippage, tradability of stocks. And I plan on continuing to add to those, maybe like one every week, so I'll keep revisiting that area. And then, of course, there's all the Trade of the Week videos. And some people say, why keep them all out there? People are going to try and copy them. You can't copy them. It's almost, hey, Colonel, it's almost hysterical. People will sometimes email me and say, Paul, the Trade of the Week video, I really liked it. I went and I did it, but it didn't work. Take a look. What did I do wrong? And they show me a trade, and I have to chuckle. I'm like, I have no idea what you're doing. But they're good to show you what can be done, because it's one of the topics tonight I want to make sure we cover. It's just the concept of techno analysis and how well it truly works. It can't be argued. So a lot of free stuff. Why so much free stuff? Well, because I know not everybody's ready to start. I know not everybody's ready to go pay some money to learn anything. And I also know a lot of you have paid a lot of money and you're not happy because you've paid at other places and you haven't learned anything. And that may be damage that never gets undone. I know a couple people that were dying to learn from me, and I think the comment was, yeah, I'm not sure how many times I feel comfortable paying to learn to trade again. And I get it. There's a place out there that charges $25,000. A place that charges $15,000. Here's my commitment to you guys. Down here it says getting fish. If you want to subscribe to stuff, a letter or the room, that's in the category of like getting fish. There's some education and stuff, but I mean, you don't learn to trade being in the room. You don't learn to trade from a letter. They're mostly fish for you, and you pay for that. And I have very cheap prices on those. If you want to learn to trade, that's learning how to fish. That's a different category. And some people question me on this because they think I'm lying to them. My total seminar program package is $29.97. You can buy 3 individual seminars at $12.50 each, but if you do the 3, they're on 3 consecutive Saturdays. And that is all you need to know. The problem is when you sign up for a place that has just course after course after course, 80% of it is what? Most of you know this already. 80% of it is just what? It's actually bad to get more information. If you're new and you're learning this stuff, 80% is what? There's a term for it in the industry. No, not even repeating. Repeating is great. Repeating is great. It's called filler. It's called filler. And when you have 80% filler, that really doesn't help you. It distracts from what you need to know. There are things you need to know, and you need to get them drilled into your head, and you need to forget all the other crap, because that's what it is. But big companies, you can't make money unless you sell seminar after seminar after seminar. When you pay with me, that's it. There's nothing else you'll ever pay for in the educational arena. As a matter of fact, just to prove that, I added a seminar called Mastering Options. There's no extra charge. Nobody's getting charged for it. no extra fee, price didn't change. It's something I thought people should get an understanding of. I'm only going to teach it probably once or twice a year. It's not going to be as often as the other seminars. And that's actually happening this Saturday. So you get, what's important is to get this stuff repeated. And more I hear people take these classes, smart people that take the classes, and after one class, they don't have a grasp of everything like they should. So you have to retake the classes. I teach them about every 6 to 8 weeks. This Friday coming up is what we call a practical application review day. We take and review all the trades from the trading room that week and see exactly how they are carbon prints right out of the manual. And how, what I say when I teach a class all the time is, this is not some garbage to just, say, oh, gee, I know this. This is stuff that I use every single day. Everything I teach is stuff I use every single day, and people know that trade with me. So that's what the whole thing's about. The seminar program, the seminars are starting up again very soon. This Saturday is the option one. That's a special one. And then the following Saturday starts seminar 1, 2, and 3. If you want, I don't want to take any more time on that. If you want to read about those, but I have so many questions on those. If you want to read about those, here is a little. Well, first of all, here's the calendar. Well, if you're just at the free stuff page, you can see the calendar. But here's the calendar. And we're gonna do nothing but some education tonight. I guarantee you're gonna love it. I just want to get this out of the way. And then here is a little, I don't know what this is. It's a web page about the seminars that'll give you a good summary of what's involved. Okay, guys? If you have any questions, hold them off to the very end. I'm gonna plan on finishing around 6, but at 6 I will hang around if anybody has questions about that type of stuff. So let's get down to business of what I want to do tonight. It's only 5 after. Topics tonight: definition of trading. A good place to start. What is technical? Is that all that's needed? Can you trade in a vacuum? You may not know what that means, but I'll talk about it. Can you do it? And a balancing act stuff that can never be violated. And then I'm going to go through in the balancing act section is bring up some charts from this week. What I always do is when I do a presentation like this, and there's probably 24 people here that can testify to this, I always talk about the trades from the last 2-3 days. Correct, everybody? Anytime, because I don't believe in going back to this great trade from 1996. You know what I mean? It's whatever happened. And if I had a bad day, then that's the lesson for the day. Here's what I did wrong. Here's what I screwed up. So that's what I always do the last 2-3 days. And sometimes I need more examples. I mean, I may go back further than that. But my point is I don't ever go back to a great day from 3 weeks ago or a great trade. You understand what I'm saying? And anybody who's heard me talk or do these knows that that's true. That's what I always do. So if it's good, it's bad, whatever it is, that's just what it is. A balancing act is something that can never be avoided. We'll talk about what that is. So let's get going. My definition of trading, this is my definition. If you look up trading, actually I don't want to go through the whole long thing. There are actually, let me give you these 2 links. I have actually a whole, this is actually a, you read those on your own time, just download. Those are a couple of PDF files. It's a little article called What is Trading, Part 1 and 2, and it gives it a little more detail on what I'm going to do now. And this one starts off with Webster's definition of what trading is. And if you read those 2, I walk through how I get to this definition. But my definition of trading is this: using technical analysis to find a moment in time when the odds are in your favor. Then it becomes a matter of entry and management. In other words, it's having the knowledge to know when the odds are in your favor, having the patience to wait for that moment, and having a discipline to handle the trade properly when it goes in your favor and properly when it goes against you. Is that a great definition? And also answer me, because I'm not sure if my sound just went out. I just got a weird message on the screen here. Great definition. You may not love it. You may want to add something, but that's what it is. But I want you to notice a couple of the lines in there. Again, I'm not going to spend too much time on the soft stuff. We're going to get to the stuff I know. You want to do some of the charts and stuff. But the knowledge to know, right here, the knowledge to know, right? The knowledge to know can be taught to you. And believe it or not, it's not really that hard. Right, TJ, it's exactly what I was going to say. It really is not that hard. I mean, honestly, and when I say this stuff, hey, Richard, how you doing? When I say this stuff, I always have to apologize. I don't want to insult anybody, but you have to agree with me that the knowledge, the content that needs to be mastered to understand technical analysis does not involve intelligence beyond an average 5th grader. Correct? Let's be honest. It's not rocket science, right? Now, I understand it may take repetition, it may take learning. I'm not saying that you can just learn it just in one sitting. That's not my point. The point is, though, that the complexity of it is nothing like you have to be some Harvard graduate or something. I'm not that smart. I figured it out. So it's something that can be definitely learned, and it's something I believe that I can teach anybody in 6, 12, 3 months time approximately. If you do the program, you take the seminars, that kind of stuff, okay? And you will love it. I mean, you'll absolutely love it. You'll be amazed. But here's the problem. I cannot teach you the patience to wait for that moment, correct? I cannot teach you the discipline to handle the trade properly. I can tell you what to do. Yeah, lawyers are stupid though. Right? I can teach you some secrets about trying to have discipline. Right? I can teach you, like in the room, Carmen, we're not talking about this week a lot, just as, not like as a focus of the room, but just on the side. We're talking about discipline and patience and things that you do. And that's one of the keys. And one of the things I like about trading with the room is that I'm constantly kind of mumbling to myself with an audience there, and I'm constantly reinforcing for myself, the patience to wait, the discipline to handle things properly. It is hard to do. That's the hard part. And that's where, and this is not an exaggeration, that's where 100% of the people fail. That's where 100% of the people fail. So that's the definition of trading. And before we even proceed, you need to understand that that's what it is, all right? And I just gave you the 2 links to the articles. You probably enjoy reading those 2 articles. There's a little more information there about it. You can go through it. What is technical? And again, I don't want to spend a lot of time here. I want to spend 5 minutes here because I don't have time to convince you if you don't believe it. And if you do believe it, you don't even need to hear it. But technical is basically, it's everything statistical about whatever you're trading. Let's just say stocks is the issue we're trading. Okay, stocks are the market. You can trade anything. I know Forex or Bitcoin or whatever else. But first and foremost, it's a history of the price. It used to be called reading the tape. Everybody says, what's reading the tape? Well, reading the tape is just looking at the time and sales. But if you take those time and sales and if you print them out on a graphical form, you get a chart. And that's what it is. It's a chart. Reading the tape is reading a chart. You take the history of all the transactions that went off and it goes into a chart. And however cynical you are of Wall Street, which it's just fine. I don't look at being cynical of Wall Street. I look at it as all part of the game that we play. And whatever happens is all part of the game. And I don't care because I look at charts. So I don't really care what's going on. But if you look at being cynical at Wall Street or whatever it is, there is one spot where the truth is always the truth. And that is in a chart. There is no lying about the chart. Almost everything else, there's smoke and mirrors, there's this, there's that, there's whatever you want to call it. But the chart is always a true representation of the sales that actually occurred that has never even been challenged. So you can't ever complain that you don't know what a stock is worth at the moment because it's worth whatever it just traded. It can also include any statistical information about the price. For example, the incredible difference between investing in the market the best 6 months and the worst 6 months. Any kind of statistical thing that you have could really be put into the category of technicals if you want to. Anything that brings any kind of statistical value to what you're looking at. Now, for virtually everything we do is looking at the chart of the price. There are other things that we can consider technical. I don't want to get any more into that. Some of the technical stuff is objective, some of it is subjective. That's something better saved for a class at some point. Oh, which reminds me, hey, the calendar you have there, don't forget also a week from Friday, the first half of the seminar I open up to everybody. A week from Friday is Introduction to Mastering Technical Analysis, and you will all be invited, so make sure you save that date. It's on the calendar. What is technical charts? Charts give us a visual track of what our price has been. After all the news, both past and future expectations are considered. And after all the fundamental data, both past and future expectations are considered. Why am I saying it with such a strange voice? Because this is the part people don't realize. The chart, the market, the charts, the price of stocks in the market, they are the greatest future discount mechanism ever created. They include things in the future that you have no idea how much is included. Do you understand what I'm saying? The expectation of future prices, the expectation of everything is built into the market, is built into stocks to some degree. Does everyone understand what I mean by that? Prices are not just a representation of past facts. It's a representation of the past facts plus a future discounting mechanism of what the market feels is going to happen in the future. There can be no denying it whatsoever. Stocks can have great earnings and crumble. We can have a terrorist attack and the market doesn't care. Why doesn't the market care about terrorist attacks? Well, because it's built in a certain factor of terrorism. It's built in all kinds of stuff. And this is the problem with even trying to interject any kind of fundamental analysis into the market. It is completely worthless. I added the word completely. You can use your own concepts. I'll get to that more in a minute. A stock is worth exactly whatever price which is paid for. Right, priced in, exactly, right? It's priced in. Not only past, but future things are priced in to some extent. How much? We don't know. We don't know. If a church gets shot up by terrorists in Ohio tonight and 12 people die, I mean, it's a terrible thing, but the market won't care, right? Market's not going to care. It might have cared 20 years ago. If a mushroom cloud appears over Cincinnati tomorrow morning, the market's going to care. In between, who knows? We don't know. We don't know to what extent things are discounted. Market is the most incredible future discounting mechanism around. Yes, it has built in future events to a large extent. Absolutely. Absolutely, positively. That's why people get so screwed up, TJ, trying to analyze the market through the eyes of the economy, because it doesn't work that way. In truth, the economy is more regulated by the market than the other way around. But again, I want to get to good stuff here. I don't want to spend too much time on this, blah, blah, blah stuff. It's all important, but it's just an understanding of what goes into this stuff. Statistics, statistics can be used in your technical analysis also. There is, that saying, sell in May and go away. Well, what that refers to is the fact that May through October are the most bearish months historically. November through April are the most bullish months historically. Is there a big difference? Take a look at this chart. Over how many years is this? Since 1950. Since 1950, if you would have invested $10,000 in the market and kept it in during the good 6 months, you'd have $2.8 million. If you kept it in during the bad 6 months, you'd have negative $6,000. Is that an incredible difference? Many of you maybe know the statistic. This is it's everywhere. I mean, it's not a made up thing. It's not like some political thing somebody, just gyrated. It's real. Now, is that how you trade? No, it's not how you trade. But it's a statistic I want to keep in the back of my mind. Like a lot of things in trading. Trading is not about absolutes. Another reason why people screw up. Another reason why engineers have a hard time at trading. Because it's not about absolutes. It's not about that. It's a balancing act. And you accumulate information to get probabilities in your favor. It's not hard to figure out. So it's something you keep in your mind, but you don't just every year you don't just sell everything in the world right then. It may not continue in the future. What is technical? Truth, technical trading allows precise objective entries and exits. It removes as much as possible. One of the biggest enemies of a trader is to double up in words in there, sorry. One of the biggest enemies of traders, subjectivity. Subjectivity is your biggest enemy as a trader. Correct, everybody? A lot of you listening to me, I imagine, are probably in that in-between state where you've come in at some point, you're trying to learn, you're not there yet, you want to get the missing pieces. You come in totally subjective, right? Just, oh, that's too high, that's too low, that can't go higher, that can't go lower, and you get your butt handed to you in a sling, right? You get it chopped up in little pieces and given back to you. Our goal is to become as objective as we possibly can, but in the final analysis, there is some subjectivity still involved. Trading is not 100% objective. It never will be. If it ever becomes that, the market will cease to exist. That's a long story. You can read books about it, but it cannot happen. It's impossible. Mostly technical analysis absolutely positively works. Let me say it again. We've met. Yeah, exactly, TJ. It absolutely positively works. There's So it amazes me sometimes when people say, "Oh, I'm not sure stuff works." If you're not sure if it does, you've never had it learned or taught to you properly. Um, it's not about absolutes, but you talk about incredible odds in your favor. There is no way. People in the room with me every day, there's no way that they could walk away and say, "Oh, well, those were all just lucky guesses for the last 6 months." It absolutely works. Of course, you have losing trades. Of course, you have losing days, but it works. On balance, the odds are incredibly in your favor. What percent technical do you think I am as opposed to any other style of trading? What percent technical do you think I am? And by the way, I started without any market knowledge at all myself. I had zero market knowledge. 18 years ago, I hate to say. Yeah, 18 years ago, 19 years ago. I started with zero market knowledge. And I went through the same process everyone else did, I'm sure. Hey, just learn those fundamentals and you'll have this mastered. I got my ass handed to me. Actually, I was lucky. I started off just goofing around on paper and just studying. But had I been trading those plays, I would have had my ass handed to me. I went and I said, okay, let's find out what the gurus are doing. And I went and looked at all the recommendations from at the time it was Money Magazine and CNBC and all these great people. And you know what? End of the year, you know what happened? Dead break even. Best people in the world, best recommendations, couldn't make a penny. Over a long period of time, not a long period of time, over 9 months, I revolved around to becoming 110% technical. There is nothing else in the world, I personally believe, sitting on a deserted island with a laptop computer, not talking to a person, not listening to news or TV is absolutely the best way to trade. I know a lot of people don't agree with me on that, and I have yet to have somebody prove to me at least that they're correct. A lot of people look at other things thinking it helps them, and when I look at it objectively, I believe it hurts them. What matters is price, and that's what it is. What are the components of technology? What do you mean? Like you mean like charts, price action? Well, we'll look at some charts, and the things you need on charts. Basically, all it is the price action of charts that I look at through candlestick bars, volume, and just for fun, I keep a couple of moving averages on the chart, and then it's learning the language of charts, money. It's learning the language of charts. Charts have a language. It's not about just trying to remember a couple cookie cutter patterns because, excuse my language, but that crap doesn't work, right? Well, head and shoulders pattern. Okay, you know how many head and shoulders patterns I could find on a 5-minute chart today? I could show you, how many do you think would be out there? If I were to take the 100 NASDAQ stocks and look for head and shoulder or reverse head and shoulder patterns on a 5-minute chart, how many are out there? 300? Right? And guess what? Half of them worked, half of them didn't. You need more information. You need a bit better understanding of what's going on. But anyways, I'm objective, but when you say objective about technicalities, if you show a chart, right, Joan, that's exactly what I was saying, is that you come in 100% subjective, right? Johan, I'm sorry, Johan. You come in 100% subjective. I'm gonna run past 6 o'clock. I'm sorry, I don't care. You come in 100% subjective, and your goal is to become as objective as possible, but it stops at a certain point. Because myself, and let's say a great trader, maybe even somebody I trained or whatever, another great trader, I have somebody in mind. We could look at a chart and disagree, right, Joanne? We could. Now, not everybody's going to disagree. I don't agree with that. I mean, if you show charts to, let's say, a dozen really good traders, they're going to agree most of the time on most charts. But yes, there will be charts and times and instances where one person will say, well, I'm going to wait and go short, and the other person's going to say, oh, I'm going to go long until it's a short, and they may even disagree whether it's a long or a short. That can happen. But you know what we do with those? We try to not trade those patterns. That's something I'm going to get to in a minute. One of the rules, I told you there'd be some great technical concepts presented to you, and I've listed a few of them. I mean, there's a lot of them. Obviously, the classes I teach take 25 hours, so those are all great technical concepts. But I want to share a few of them with you tonight, some of the ones that I think that are really key. But one of them is going to be that very topic, is that, and this is a real number from my own personal resources, but 97% of the charts you look at, you should do what? 97% of the charts you look at, you should do what? And if I had a hand with 5 fingers, which I do, and I were to take one of those fingers and say, here's one of the most important things you should know, this would be one of them. Right, 97% of the charts you look at, you should just go next. In 1 second, you should go next, next, next. So when people want to get in a discussion about some meaningless chart, I could care less. I get this in email all the time. I'll say, no, I don't like that chart, wouldn't even look at it. But Paul, well, it's been falling since Thursday, And 3 weeks ago, there's a bar that it reversed in this area, and they just come up with a list of things. And this is exactly the problem, guys. A list of things is not a strategy. It's not a concept. It's not learning the language, right? It's like coming in to visiting Mexico and you need to go to the bathroom and you say, comer, caminar, hablo, because those are only 3 words you know. Okay, those are 3 Spanish words, but they don't make a sentence. They don't make any sense. You understand what I'm saying, everybody? Just picking up random things on a chart is not technical analysis. It's just stupidity. Sorry, I'm really on a roll here. So Johan, you're exactly right. I agree 100%. And that's where people get frustrated, because there is a level at which you just, hey, there can be disagreement. You know what? I have it wrong sometimes. Right? I get it wrong sometimes. Everybody gets it wrong sometimes. But that's not the point. The point is that you're right the majority of time. You know when to wait for the right moment. You act at the right moment. And you handle it properly. And you're going to be a winning trader. It's like guaranteed. Can you trade in a vacuum? Let's get to some real heart of stuff here. Can you trade in a vacuum? What that means is, can you learn a single chart pattern, whatever it is? Just take one chart pattern, one concept, whatever it is. Let's just say, without using any of my terms, let's just say you're finding some kind of breakout play. Can you just trade that without understanding anything else in the world about other time frames, about market environment, about anything? Can you do that? And the answer is yes, in theory, but no in practicality. Oh, I just saw a note I had on the last slide. Can I back up a second? Would you mind? Let me just pretend I didn't go to this slide. I just saw a note I had to myself about techno. Before I leave techno, I just want to bring this up because we had such a great example 2 days ago. Such an incredible example. And what cracks me up is the news. And you guys need to understand this. And I guarantee you this is 100% correct. And I'm not trying to be funny. People think that news drives the market because of the way it's presented to you. In other words, the market does whatever it does. If the market has a bullish day, the people stating the news, CNBC and any other pundit out there, you know what they have to look for? They have to look for the reason the market went higher. So they pick the most bullish news story of the day. There could be 10 bearish stories, but they have to pick that one bullish story. And the same thing in reverse, right? If the market falls, they don't go out there and say, well, we had a very bullish report on this, we had bullish earnings on this, we had bullish on this, oh, but the market fell, I can't figure that out. Do you ever hear anybody say that? You ever hear a news commentator say, gee, everything was great today, I don't know why the market fell. I'm puzzled, I'll see you tomorrow. You ever heard that said, ever? No, yet that's what happens. So what they do is they just simply say, oh, gee, that book-to-bill ratio is really bad today, and that drove the market lower. They just make up whatever needs to be said to handle it. And you had the greatest reason ever, the first day the market fell. What day was it, Thursday? Wednesday, Monday, Tuesday? It was, what day was it, Thursday? Thursday, right? It was Thursday the first, let me look at a chart. Thursday was the first day down, right? Thursday. Yeah. No, it's Friday, because Friday was the news day. So what happens on Friday is the market's been very bullish, and we come out the first Friday of the month. If you don't know it, not that I care about the economic numbers and that little thing I put out on Sunday night, I make fun of them, but Friday is the most important day for pre-market economic numbers, because the first Friday of the month is known as the jobs numbers, and they're thought to, and they do relay the most important information about the economy, because it's the information about who's hiring and firing and that kind of thing. And it affects the economy. It may or may not affect the market, but the market always reacts to it. So guess what happens? We have the most bullish, wonderful numbers on Friday. Correct, everybody? Nobody can argue that, right? And if you heard people talking about it Friday, did anybody hear throughout the day the comments being made? Or you can see even the articles that come out in email. It's hysterical. Because the market gaps down a little bit and then it starts falling, right? And yet the news was all bullish, right? There wasn't a bearish thing to be said. best economy America has ever had, and blah 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 blah. Jobs are unemployment is so low that people are blah blah blah. And so guess what happens? Well, now the economy is so good. It's so good that now this is bad. So the market's falling because now we're going to have to raise interest rates, and of course that's devastatingly bad. So obviously it'd be better if we were going back into a depression because then interest rates would stay low. And you know what I'm saying? It makes no sense at all. And I even heard two people arguing about this guy who was like whatever station I was listening to was just a financial blurb, and then they went back to the news guy, and the news guy asked the financial person, said, I don't understand. It's the best news we've ever had, and the market's falling. The market likes bad news. And the girl just laughs. Well, yeah, kind of. That's what it is. Anyways, I just want to put that in your head that you're just being told what you need to be told to justify what happened. But there's no correlation whatsoever. Anyways. Did some of you see that? Did you notice that? Did anybody notice that with me? Right. But did anybody notice that Friday? Did anybody scratch their head going, what the heck is this? I mean, it's like, if you were to trade the news, you would never know how to do it from day to day because the market just does what it does, and then at the end of the day, you have to pick the right stories. But anyways, can you trade in a vacuum? Yes, in theory. No, in practicality. What do I mean by that? Here is, to me, one of the best in a vacuum chart patterns. Is from about a month ago. Oh, I have an explanation first. Excuse me. Why only in theory? Well, first, what is perfect, Johan, is subjective to start with, right? Great traders may disagree on a pattern. There's no absolute authority on what perfection is. It is like the perfect spouse. Correct? Experienced traders? I almost put a line in there saying, to the extent there is an authority on what is perfect, it's completely wrong anyhow. But I didn't bother to do that. The truth is that most of trading is about trying to deal with the fact that things are never perfect. It's a balancing act, one of them that most people are never equipped to handle. Let me read this page again, because again, this to me is one of the most important things you can learn. What is perfect is subjective to start with. Yes, we all have stuff that we teach, but whether or not you clear that area, whether or not that is a support area, whether or not that's too extended or not, all these things, no matter how much you're trying to find, and when you look at the big picture of everything put together, it comes down to being somewhat subjective. Great traders may disagree on a pattern. There's no absolute authority on what perfection is. It's like the perfect spouse, right? Think about it. What's a perfect spouse? Want to get together and argue with somebody what a perfect spouse is? You could list certain attributes. You may both. Good answer, Herman. Me too. See, you're wrong, Herman. Mine is the perfect spouse. But I mean, you could get together and list certain attributes, but at the end of the day, right? Wouldn't you end up having some disagreements on what perfection is? The truth is that most of trading is about trying to deal with the fact that things are never perfect, right? It's a balancing act, one that most people are not equipped to handle. I knew a trader one time that said, "Oh, here's the secret: you never take anything but a perfect pattern." Okay. He took patterns I thought were terribly flawed, but they were perfect in his mind. And this is where the problems come in. Here to me, I mean, this chart still sticks in my mind. Some of you know this chart. This is from a month ago. To me, this is the most perfect pattern I've seen. Some of you obviously have spouses leaning over your shoulder here, or about to lean over your shoulder. To me, this was HLT. This is Hilton Hotels. This is you can see the date. It was a month ago, exactly a month ago, January 8th. I actually saw this chart when I was doing the bi-weekly scanning session with you guys. You know, the little free thing for you members we get together every Monday. I found that chart and I said, you know what? I love this chart. I'm going to be trading this tomorrow. Remember that? Were some of you there for that? Anybody remember that? It was literally on a Monday night that I saw this chart. And it was Tuesday this play happened. To me, this is absolute perfection. Now, somebody else listening, I didn't put the daily chart here, but the daily chart's an uptrend, 60-minute, comes to prior highs, consolidates. The next day, pops above the consolidation and falls hard right into the support area. Boom. Picked it up right there, sold. Easiest trade I've ever done, the most sure trade I've ever done. Just beautiful. Beautiful. To me, that was a perfect pattern. And that was something like, I could almost say, I didn't care about other time frames. I didn't care what the market was doing. I probably did, but this is one of those that more than anything else, I would say trading in a vacuum. That's what that means. It's just getting a pattern and doing it. And it's a wonderful thing. When you have the odds on something, you get aggressive. When you don't have the odds, you don't trade, right? The problem is, though, is that was a month ago. And that was the last thing that I would have called, hey, that's a pretty perfect pattern. So in other words, in my mind, everything since then, probably an average of 4 or 5 trades a day, they've all been compromised patterns. Do you understand what I'm saying, everybody? Most perfect pattern according to me. Somebody else may not agree with that. That's fine. It's a balancing act. It's always in every issue, every trade, every decision. What is a balancing act? It's a balancing act between reliability, that's the likelihood of not stopping out, and profitability, how much you can make on a certain trade. What do I mean by this? Well, here's an example, but you encounter this decision whether you know it or not every single minute that you're trading, whether it's long-term trading, day trading, doesn't matter. For example, let's say this is a chart. It pulls back. You decide to enter somewhere on the way up here, right? You're going to have the stop's going to be the same no matter where you get in. The target we're going to pick randomly here is going to be the same no matter where you get in. You follow what I'm doing here, everybody? There's a pattern that you decided to trade, right? Here's entry point number 1. Here's entry point number 2. Here's entry point number 3. Arguably, entry point number 1 is, on the balancing act, the most aggressive, meaning it is most likely to stop out because there's the least information about whether you're actually moving up or not. You're very close to your stop. Would everybody agree with that? And again, I'm just very general discussion here, not being super specific or technical, but does that make sense to you? The sooner you jump in, the more likely you could stop out. You haven't established, the trend going back up again, whatever it is you're trading. The more you wait, the more likely you've established your trend. The further you are from the stop, the greater the stop is, the more likely you're going to be not stopping out, but you're also giving up profit. In other words, if you trade the way that I would teach people and the way most people trade, is when you're way up here, your reward to risk is 1-to-1, right? When you're way down here, it's 4-to-1, right? So if you wait for entry 3 all the time, you have a 1-to-1 reward to risk, but you have good odds of not stopping out. If you take entry point number 1, you probably have worse odds of stopping out, but you have a 4-to-1 trade. How often do you have to get entry number 1 correct in order to be on par with this trade? Well, you'd have to be right 1 in 5 times. It would give you a tie with the other trade. You face this balancing act every time you evaluate a trade, every time you decide what time frame you should enter or manage it on, every time you make a management decision, every time you raise or lower a stop. Every time you do that, you're involving this balancing act. Reason I hear the one thing that kills most retail traders is waiting for the best confirmation. Yeah, it's a balance, like I just said. I mean, Herman, you know how excuse me, sorry. I have 2 phones here. I didn't silence one of these. You know that it's a balancing act. It's a big part of what I teach, actually, right? You've been through the classes. It's a big part of what I teach. When you have the perfect location and that's why I take and I alter entries into 2 different categories. When you have the perfect area and you're like, wow, I have great certainty about this, we get aggressive with the entry. When we don't, we look for more confirmation. It's not a permanent entry style. It changes with the trade that you're in, with how, what the trade is giving you. You don't get the same thing from every trade. How do you get the odds in your favor? Well, again, we could talk for 25 hours about this, but in a nutshell, is first you need a watch list of patterns that you recognize and love. It requires a little bit of homework. Whatever time frame you're trading, swing trading, core trading, day trading, you need to come with a list, a prepared list of things that would be possible trades for you, right? You have to come with that. And second, you need a plan that includes market timing. And we're going to take a good look at that in just a minute as I review the first 2 days of this week. And I'll review today a little bit. I don't have the results finalized for today, but and today was just a small winning day. I almost didn't want to trade today because I knew it was going to be a difficult day. Third, you need an entry concept, and fourth, you need a management plan. So I want to run through and take a look, and I promise you we'd go through some very hard-hitting stuff here, and we're going to do that. I'm going to take a look at the last couple of days and some of the trades, and I want to show you exactly the balance between having a plan for the day, having a market bias, and having individual trades, and how it all comes together, and how from day to day that can change greatly. A few lessons. I believe in some concepts. I believe in finding a moment in time. I don't know how much I can get into that, but when I go over a couple of charts here, I'll show you what I mean by a moment in time. Which also means it's not about being right or wrong, it's about making money. This is actually something I've said for years. It's also a quote, I don't know if I got it from him or not, but from Mark Douglas. It's one of his famous quotes, is that trading, what are they? These, what do you mean? These, I'm listing them, they're right in front of you here. These are the concepts. These are some of them. Again, there's a whole lot of them, but these are the few that I want to share with you today as I go over some charts. It's not about being right or wrong. It's about making money. It's about finding that moment in time and then acting appropriately on it. When that moment in time is there, it's not really a question about whether you're going to be right or wrong. It's that this is the moment that everything's going to happen. Which, for intraday traders, here's another great lesson for you. The 60-minute chart is your mother chart. It's your guide. You never trade against that. The only exception is if you're really, really kind of a scalp trader, like you're in things 5 or 6 minutes, you could use the 15-minute chart. But basically speaking, you never trade against the 60-minute chart. It is your guide for what you want to do. And I don't care if you're trading a 5-minute chart, you don't ever lose sight of the 60-minute chart. And you should quickly ignore 97% of all the charts you look at, because your standards to be such that you're just not seeing patterns in most of the normal day-to-day circuits that you see out there. We're going to look at that right now, Money. That's what I want to do. So this was Monday, and I'm going to switch over to charts here. This was Monday. There were 1, 2, 3, 4. This is the trading room that I run. These are the trades we did that day. This is 6 trades. First one out of the gates was a gap trade. It was a loser. It kind of hit target 1, and it was very sloppy and spready. I never got out of it. I took a loss on it. The rest of the trades were all good. But I want to show you, so this was Monday. So let me bring you over to the charts here, and then we're going to take a look at the prep that went in to Monday. So let me see, I'll bring you back to see this, but we'll take a look at BMY was a gap trade, and then GLW and AKS. Let's look at those first 2 trades. They're the first 3, BMY, GLW, AKS. So let me bring you over here to some charts. And I want to just kind of give you a sense of what on your own. I mean, this is all great information for you to do that. If you've had some training and you think this will help you finish the job, great. But I do want to warn you, be careful out there. I always say if people know 90% of what I know, I'm scared, because it's not enough. You really have to understand this stuff, guys. You really have to understand the charts, or you will not be successful at it. Correct, everybody? My biggest peeve is that people that don't learn this stuff and then mock it, that say, oh, that doesn't work. And they have no concept about what truly technical analysis is about. So up here, if we look, here's a 60-minute chart, which I'll change to various intraday time frames, a daily chart, and there's a monthly. Well, actually, we don't need the monthly here. So let me make this a 15-minute chart right now. We don't need a monthly chart there. All right, so let's go back to Monday. And the first concept is a plan. I'm going to take this as a day trading session here, okay, because it was day trading Monday. And what's the plan for Monday? So today is Wednesday, Tuesday, Monday. So we just came off this day on Monday, right? We just came off this day on Monday. And we gapped down to here, all right? A key thing to me was that we were very extended down. Now, the first trade I did had nothing to do with the market. It was a gap up on BMY. And to me, the market analysis in this was zero because it was what could have been a bullish gap. This is the gap up to here this day. It cleared everything on the daily chart. It ran higher. It came a nickel from the target I wanted. It got real spready up there. I kind of fumbled it and ended up looking for it to reverse and never did, and it stopped out. But that gaps to me of that quality are generally in a game plan that I don't care about the market because that one was traded at 9:34 in the morning. It was 4 minutes after the market opened. But the plan for the day was this, and again, people are here in the room listening to me. So people here that are listening to me were in the room. The decline we had that day, I'm going to make this, let's go to the 15-minute chart here. Boo, 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 boo. Can we squeeze that down a little bit? Yeah. So we were extended enough here on the 15-minute chart, and specifically on this hourly chart, we fell from here to here, and then we gapped down. Now, I am not about to start shorting then, okay? I know the hourly chart is your guide. The extension from here to here on the hourly chart is such that I'm not going to start shorting. If we happen to drop, to me, that's a once-a-year occurrence. But I did have a bearish bias for the day. So what did that entail waiting? People here in the room, true or false? I said, we're waiting for the market to rally up and do a 15-minute or 60-minute sell setup into the general area from where it gapped down, right? And it was in the letter that day. I write a letter, it was in the letter. So that's what it was. So what we're looking for here, if you look at a 15-minute chart, we're looking for the market to come back and rally. And as we came back in here and then started to roll over, I looked for some confirmation. And then while the market was running up, and I explained this to the room as being to me just a perfect day for what I want to do, I found stocks I wanted to short. Now I'm looking at short stocks, and guess what I get to see? I get to see their true colors. Why? Why do I get to see their true colors? I'm looking for a short, and I'm looking to short when the market's right here. What do I mean by I get to see their true colors? You may not know what I mean by that, but take a guess. What do I mean by that? To me, this is the perfect scenario. You need a game plan, and you need time to be able to execute it. And sometimes you don't have that. But as the market is running up, guess what? Right, I'm looking at things that are either running into resistance or they're weak. I have a half hour. This is actually, yeah, I have a full hour. I had a full hour to look around and say, hey, what do I want to trade? I already have a whole list of stocks I think are weak. I get to search. And I'm sitting here just waiting, and I want to see to what extent they're going to rally while the market's rallying, right? Now, my bias is the market's going to roll over. And now I have stocks that I'd be willing to short regardless of what the market's going to do. So I kind of get this double whammy. I have stocks that I like to set up, and then behind it I have the knowledge that they weren't able to rally beyond some point, even with the market being that bullish the first hour. So the first one was GLW right around 10 o'clock, short at 31.33. Let's take a look at GLW. GLW I had picked out on Monday. This is the day I'm looking at it here on this big red bar day. I had picked this out because I thought this was a bearish pattern going on here on the hourly and on the daily chart. Because we had this gap down the prior day. Remember, the prior day was not a bearish day, and yet this stock gapped down, could not recover filling the gap, and went sideways all day. So I liked this. These are the type of setups I look for, where we have this consolidation and then we gap down. So as we rally back the next day, let me see if I can give you a little more detail here. If I go to a 5-minute chart here, make this a little more normal looking, and go back to that day, boom, boom. See what happened here? To me, this is a huge resistance area through here. And really the heart of it's right in here. This is a huge resistance area in here. It's called a big minor resistance area. And it's really big because the stock cannot get over this on a bullish market day. That was the gap down high. So running into here with market timing, I now have market timing, I have my game plan in place, and I have a strategy. This is a 15-minute sell setup. And then I look for very specific type entries that get confirmation. And in this case, without giving up any part of the trade. So this actually was entered under 31.34, right around 10 o'clock. So this one here, I took this right in this area in here. But notice that this is the way I do some of these entries sometimes. The stop on this, the entry was almost right at the high of the day, and the stop on this was the 31.56. How close was I to getting stopped out? Not even anywhere in the neighborhood. Stock, and then I have different options what I can do when it starts to drop, whether I want to add or just stay safe for the trade, whatever it is. And I wish I got all of this. I didn't get all of this trade. I mean, this ended up being a good trade. It was about a 1.5 hour trade when I was done out the door. Yeah, about 1.5 hour trade. But what I did that day, rather than trying to just focus on one thing, I spread it around a little bit, and then I took another trade. I took AKS shortly after this one. So instead of putting all my eggs in one basket with one stock, I had a good bias. We had good timing. I was a little aggressive here. I went to a second stock as well, AKS, at about 10 after 12, under $5. Boo, 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 boo. And this was right here. Now this one I didn't come to the market with. I found this day because it had put in this rally, snapped up to this area right in here, again into another resistance area, and really stalled. It's in a downtrend everywhere. It's in a downtrending hourly. It snapped up, and I was catching this right off the high. So again, that was on Monday. That's right here. And I looked at it actually as a climactic type run. So a little climactic run into resistance. You're not seeing the resistance here because it's up here on this chart. And that was short under $5 with a stop up there at 5.20. Zero chance of stopping out. So again, so then that one was in play. And then I took some target on GLW, AKS in play. This ended up being, I took a real cheap first target on this because I was trying to just kind of build into some positions for the day, thinking we'd have a big bearish day. Back half of this was about 1.7 Rs. I have it down here as. CVS then was the third one. CVS turned out to be a bit of a home run. That was at 10.17. CVS was on my bearish watch list because of this gap down this day, and then this engulfing of this green bar, a narrow day this day, set up an hourly chart that looked like this, and then we run up into that hourly downtrend area and shorted that as, again, the market's rolling over. So you get the concept of what I'm talking about. This is, and this, like I said, I always take the last 2-3 days. This happens to be a really good teaching day, because it was a good day, and it was a day that fell right into plan. They had a market plan. I had the patience to wait for what I wanted to do, and the knowledge to enter the things properly. And, could another great trader have said, hey, Paul, you know what I did? I didn't mean to say I'm a great trader. I just meant to say, could another competent trader, could he have said, hey, on this gap down, I'm going to go long that first 30 minutes? Yeah. You could have found long plays that first 30 minutes too. I chose to wait for the shorts, right? Those moving averages, Murrah, I know you, right? You've been around a long time. I remember your name, Murrah, right? Murrah M. You've been around forever. I mean, you've been. Those are the 20, the 40, and the 200, simple period moving averages. Not that it matters all that much, but Paul, what a great name. How do you determine the market at a bearish bias? Well, it's based on just applying all the technical concepts to the market itself. That's what it is. And it was mostly because this day, if you look any other day that we had a stall in here, the market reacted bullishly to it. And we came down to a support area in here. And if we were going to follow the pattern of the rest of history for the last year or two, or however long it's been since we had a hiccup in the daily chart, we should have got bought in this area. And the fact that we gapped down was a good indication that we weren't there. Now, what could have happened is we could have just plowed right through this, but I waited for the market to roll over, get a little confirmation the best I could. And again, to buffer that, I like the word buffer, Paul, to buffer that, I didn't trade the market directly because I didn't have great conviction the market would necessarily fall. That was the game plan. So I buffered it by taking stocks that I thought would fall whether the market did or not. And if the market falls, they're home runs. Okay? Was I wrong, Murrah? You've not been around before? I swear I remember your name from a few years back. And that was the main game plan for the day. And then later in the day, I tried to go to a couple of relative things. They basically broke even. The day was pretty much over for me when the shorts recovered. But then there was just to see what I did. This one did not work. It lost a half of an hour, and then I did another trade later that made almost half an hour. Just a slight loss between the two. But way back here on Mark this day, you see, Mark right here, see this here? This had great relative strength this day. This was the day. And again, not knowing we were going to have a big 2-day debacle necessarily, I tried to play that pullback in there. This had this nice move in here, and I tried to play that on this pullback, and it just never worked. Great trade. I love the trade. It's one of those I look back and I go, okay, that's just one of those that, I did everything right. I found a good stock, found the right moment in time. I entered that after the market had made its first drop to a support area. If the market was going to hold, that was the right time to do it. Market didn't hold, probably affected the stock, and there we go. Now, we go to the next day. Well, that's just it, Paul. Sometimes it isn't, sometimes it isn't. That's my point. For this day, again, market bias, a game plan for the day, individual stocks. Those are the three things we're always looking at. When they all come together, it's great. There are some times where I don't care about the market bias, or I don't know it well enough. Now, the next day, which was yesterday, let me do the market bias first, and I'll show you the trades. The next day, big gap down after 2 days down, and the biggest bar. This is the biggest bar on the chart in 2 years, and then a large gap down. That's just a fairly standard technical concept that we're going to get bought. And I even went as far to say that that's the low forever. I don't think this is the beginning of a bear market. I think these 2-day flash crashes, I like to call them, never lead to a bear market. I mean, beyond what just happened. You had the big 2-day drop, but they usually do not follow through after that. So I think that was the low forever. Now, the next day I had a very specific bias, and it was called be very aggressive, get long at open some stuff. And I did, and it turned out to be right. As a matter of fact, the market, and I put in the letter, and I hate being this aggressive in a letter like that, but I said that the best option is to get long like almost the first minute of the day, right? Some of you get the letter, and I can show it to you. It's what it said, get long the first minute of the day. The market literally 5, 2, 3, 4, 5 set the low after 1 minute. Hang on. Let me just show you. It put it in a red 1 minute bar, and that was the low of the day. And naturally, if you have that market bias, guess what? You're going to have a good day, right? And this was a case yesterday where, to be honest with you, it didn't matter what stock I played. I had a list of stocks. The sixth. Yeah. See, there's the market yesterday. That's a 1 minute chart. We fell for 1 minute and then rallied whatever percentage that was. That's huge, right? I remember saying to the room, I looked at my thumbnail charts, and I had about 25 thumbnail charts up there. Any one of them would have worked. I think literally, right? Herman, whoever. I think literally every bullish chart we had out there would have worked. I took Ford. So these last 2 days were examples of market bias, and a game plan is everything. Now, that's not always the case, though. Let me go back to. It's not always the case. There are some days where you market and the game plan takes back seat to great individual stocks. Does that make sense, everybody? Yeah, Tony, I mean, that much of a drop, that's the bit, again, I'm not big on these statistics, I don't care, but I think that's the biggest point drop ever. Point drop, not percentage drop. That's the biggest point drop ever. And the size of those 2 red bars on the chart, I mean, yeah, I said once in a decade, it's a saying, I don't hold me literally to it, but it is yet. An event like this, those 2 days down and that gap down, that's something you see once in several years, whatever that literally comes out to be. Okay? I knew it. I knew it, Mara. I knew it. I'm not bad with names sometimes when they're typed in front of me. Thanks, knowing Jeremy. Okay, so banks. So here, so there were the. I'm sorry, this is Monday. So here was Tuesday, and again, long at 9:30, long at 9:32, long at 9:40. Boom, 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 boom. Right. Hard. Talk about the biggest screw up this day. MU. I raised the stop on. I had so much long stuff. I raised the stop on MU. It trailed up by 2 cents, and it went on to be the biggest winner of the day. Little mistake there. Banks taking profits. Money Circle. Letter sent once a year. Will there be? Yes, there is a recording, CB. And I think I actually did it successfully. It says it's still recording, so there's a good chance we will. Yeah, I answered her, Davis. Yeah, 20, 40, 200. And again, it's not even a big deal what moving averages they are. I mean, it's not a, because they're used as a general guide, so I don't really care what you use, but I use 20. Market V bottom, yes. No, you're right, Davis. You're right. How you doing, Davis? Simple moving averages, yeah, that's all they are. No big deals. So again, I don't want to go through everything, but they were unique trades. And then just to be fair, today was barely a winning day, barely. I was up actually more than goal, and then I took 2 afternoon trades that gave back some money and blah, blah, blah. So, but I don't have that finalized because I was working on this presentation this afternoon. So where are we? So the plan of doing this, but what it starts with, guys, is, and I have a few more comments here, so don't go anywhere. But the first part of that definition of trading, the first part of it is having the knowledge to know when the odds are in your favor. I'm working, I don't mind taking email questions from people that are not working with me. That's fine. I'm trying to help anybody I can help, and I know a lot of people have, gone somewhere they're not happy with, and they're trying to put the pieces together. But I'm working with somebody who's trying to write a trading plan, and we ran into a huge problem. And the best way I can do maybe is give you an example. It's kind of like if I had to write the procedure for a doctor to do a heart transplant. And I email a doctor and say, hey, I'm having a hard time writing this procedure to a heart transplant. And he says, well, what's your medical training? I said, well, I used to watch Quincy on TV 30 years ago. Does that count for anything? That's literally what the conversation's like. And I don't mean to be mean. Don't get me wrong. I'm not trying to be mean. But you understand what I'm saying is you can't write a detailed plan of what to do when you don't know what you're looking at. Because his plan was, well, I'm working with 3, 4, 5 people I'm doing this with right now. So it doesn't matter what his plan was, but it just didn't make sense. It was just like, I don't understand this. This is not an objective plan. But you have to have the knowledge to know what you want to do. That's the first step. And after you get that first step, which is not that difficult, then you have to move on to patience and discipline. And you know where you really get patience and discipline from? You get it from really getting some confidence. And you get confidence from knowing what you're doing and then doing some trades. There's a video out there. Again, if you go to the free stuff page, you may want to, if you're enthused, you'll look at all the stuff. But there's a video there I want you to look at. Because again, in there, it's the last webinar I did. It's called From Chart Reader to Trader Investor. It's from chart reader to trader investor. It's on the website, on the free stuff page, and it's down there under prior webinars or whatever. Again, I think it's one of the more important things to understand. The fact that you have to approach trading the right way, and then when you get the confidence, start upping your risk amount so that you end up making your living from 1 hour a day. I was saying 1 hour a day keeps the job away. And people do it backwards. They do it exactly backwards. They start off with too much risk, and then they never advance to an acceptable level. They think that they're being safe by risking $100. Oh, and I'll just try and get 12 trades right today. You can't get 12 trades right today. I can't do that. I don't know how you're going to do it. You can't do it. So you have to get this balance. It's very critical, and I think most people do it exactly backwards. So that's partly what that video is about. So watch that if you get a chance, if you're still struggling with trying to do stuff. What are you guys saying? Oh, thanks, guys. Today, why today is the reverse of yesterday from a letter? Because the prior day was 100% bearish and today was 100% bullish. Oh, I'm sorry. Why today from yesterday? Why is today the reverse of yesterday from the letter? Oh, because Tony. Oh, from I know what you're saying, Tony. What I said from a aggressiveness point of view. Yesterday, I literally said to take trades the first minute of the day, right? That was one of the options. Today, I said you got to wait. You just got to wait. Let me show you today. Game plan today. Game plan today was critical. And we waited today, right, Carmen? We waited today and waited and waited. Pull up the charts again real quick. Unfortunately, they take just a second to switch over. Here's the problem today. 60-minute chart says it best. Is that we ended yesterday here, and in general, I think this is bullish. But look at the what chart is your guide, everybody? What chart is your guide as an intraday trader? Yeah, Herman, you did great with Snap. I was jealous. That was a great one. 60-minute chart is your guide, right? Do you want to go long here? Is this where you go long? Well, where do we close today? We close the day here. We close the day right there. Not that last bar, right here. Is that where you want to go long? I know I didn't do it though, Herman. No way. No way. So you have this problem. This is why Tony is the opposite, because you have a conflict of time frames. Big picture, I think, that was the bottom, but that doesn't mean we're going to go, it doesn't mean we're going to put in the biggest green bar on the chart every day going forward, right? It's going to be backing and filling and a lot of sloppiness and everything else, right? So the concept was we need to see this pullback, and also identified this here is going to be the key resistance. Remember I drew this chart, guys in the room, right? Herman, I drew this chart on the line this morning. I drew this line on the chart. I said that backwards. I drew this line on the chart this morning before we hit it, correct? Carmen, Herman, right? Said we have a cap above us and an extended move. You can't go long this morning. You have to wait to go long until we get down in here. Now, I tried that. That's what I did this afternoon. Didn't make any money. I made the money today shorting right here. I shorted Intel right there, and that made the money on that drop. Before that, I was break even from a trade or two in the morning. Intel made I made a little money in the first two trades. Intel made money, and then I gave most of it back. Going long in here. And you know what really killed me, Herman? I didn't do. What was the Nutso stock? And I said to play this. I said play it, and I didn't play it myself. What was the crazy stock? Consolidate. I said here's the breakout, and I just couldn't pull the trigger on it. It was. I don't want to flip back to the other page. What was it? I had to flip back. No. It's supposed to gap down. It gapped up a little bit. It went ballistic, went through the whole base. And I said, you never short a stock like this. As a matter of fact, I don't care how extended it looks, not Roku. I said, I don't care how extended it looks. It was HAS, Hasbro. Right, remember this one? This base here? Twice. And I should have played this instead of playing what I played. I played something off support, didn't go anywhere. Yeah, that was a fun mover today. That was incredible. But what a beautiful pattern right here. Anyways, guys, I'm running a couple minutes over. A couple more notes here to say. There's other things too. The concept of multiple time frame analysis is just critical to understand. Swing trading. I have a view on swing trading. What is commonly taught is swing trading from the daily chart, and it is the worst time frame to use. I don't swing trade from a daily chart. You go over, you go under. Swing trading from a daily chart, to me, is deadly. It's the most difficult thing there is to do. I never do it. Again, that could be the topic for another, maybe that should be the topic of another session one of these nights. And let me give you another one too. You get any emails saying, great new thing, you got to trade Bitcoin? If you're not happy trading stocks, trade Bitcoin. You get any emails like that, anybody? Because, Paul, it's a concept. It's a technical concept to understand that when you have an extremely puke bar like that and then you gap down, it's called a novice move, and you're very likely going to get buying the next morning. And again, Paul, I never know anything. I'm not the sharpest tool in the shed at all. I don't know anything, but I know when to act, and that's what's important, Paul. That's what I was talking about where, I'll give Douglas the credit for it, even though I was saying it without knowing it, but it's not about being right or wrong. It's about knowing when to act. It's about making money. And that was a moment in time to act, because the problem is, Paul, people waited. I know some people in the room waited. They waited, and guess what? If you waited, you were done. You didn't do anything, or you lost money. It's a case where, you could be right, you could be wrong, but it is the moment where you're going to make all the money for the day, if you're right. And there are good odds I was right. And that's where you have to make that decision when to act and have the authority to do it and the conviction to do it. Yeah, when I see emails like that, I just say to myself, you've got to be kidding me. I mean, guys, trading is trading. When you learn how to master a chart, switching the underlying security is not going to make a difference. Agree? If you can't trade stocks, you're not going to make money trading cotton futures or Forex or Bitcoin or any other thing in the world. It's not something different. It's the same thing wrapped in a different package. You're not going to make money. Oh, you got to learn trade. There's no learning to trade Bitcoin. There's nothing to learn. It's a chart. You put a chart in front of me, I don't care what it is. I don't care if it's Mongolian rice tulips and the rate that they grow. It doesn't matter. If it trades with volume, it gets a pattern that's underlined by human emotion, and you trade it. But you don't go to Bitcoin. It's the stupidest thing in the world. It's too volatile, off the chart. We trade stuff that is all the volatility in the world you want. Volatility is not an issue. You can make all the money you want. It's just a matter of your skill level and how much money you want to throw at it. That's all. Right. Colonel, yeah, you guys can hit me with some questions. I don't care. But please don't send charts that are marked up and that kind of stuff. Send your entry, the day, the time, the symbol, the entry criteria, your entry and exit numbers, and give me a specific question. Please don't ask, what do you think about this? Because 97% of the time, what's my answer going to be? If you say, Paul, what do you think of this chart? What am I going to say 97% of the time? I'm going to say, don't know, clueless, why are you trading it, what's the question? So ask me a question. Okay, but I will gladly answer those as long as you keep them in a concise form. Not a PowerPoint with 37 charts attached and all marked up and saying, what am I doing wrong? What else? Are we, that's all. So those are my last comments, or I think those are all my comments. Boo, 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 boo. Again, if you joined late, somebody's chatting me about seminar things. This is a good little summary of seminars. They start up. I'm doing an additional seminar Saturday called Mastering Options. It was added to the program for free for no charge. And what else? Again, if you are, well, you can read that on there. There's, if you took class with me before, you could be entitled to get on the retake program. If you used to, I don't advertise this, but if you're not currently and you used to sit in the room with me at VCM, you can also, there's a deal for you also. That's about it, right? What else is going on? A lot going on this week. So then Friday for you seminar program members, there's the practical application review day on Friday, I mean. And then a week from Friday is a class you're all invited to, the first part of Mastering Technical Analysis on Friday from I think 12:30 to 4:30 or something like that. But check the calendar when you can. Okay. Does anybody have any questions? Again, I'll call it officially done, and I will just sit here and answer any questions you want to for a few minutes. What chart do you use for swings? Is daily is deadly? Well, you use all your charts to evaluate things, Murray. I didn't mean that, but I mean taking your entries from the daily chart is deadly. You go one way or the other. You go under it with an hourly chart and do what I call hit and run swing trading by taking 1 to 2 to 3 day pops, or you back up and give it the room with the proper weekly setup and give it some time, because charts, they in a beautiful bullish market, it can work, but most of the time charts are slopping around too much. And you will find out, Murray, since you asked the question, I bet you that half of your swing trades you stop out on the morning of the first day you hold it, correct? You hold it overnight and the next morning you stop out, right? I bet you half of your stop outs occur the morning after you enter the trade. Nope. Okay, I was wrong. For a lot of people, that's what it is. But you can do it if you understand some things about it. But you have to really manage it properly. But it's a difficult time frame because you're using a wide stop, and you have to get that move pretty clean, and you don't often get that move that clean right away. It either takes more time to work through, or you want to get that first hit, and you take that then on the hourly chart for a day and a half or 2 days. No, HR, the options class is considered to be one of the classes, will not be recorded. I apologize for that, but as you know, I don't record the actual, it's part of the paid for seminar program now. It's not a free class, you have to be part of the seminar program to take it. So it will be redone at some point in the future. But that's not going to be every 6 to 8 weeks with the other classes. That'll be like once or twice a year. Hey, Sean. How you doing? Okay, HR, sounds good. You mentioned asking the question concerning the big responsive move yesterday in the major indices. What question did you ask? And when did you ask it? What? You mentioned asking the question concerning the big responsive move yesterday in the major indices. What question did you ask and when did you ask it? I'm sorry, Paul, I'm not getting that. Oh, are you really? Congrats, Sean. Congrats. You were just chatting with me on email, right? I know a couple different Seans, but I think Sean M. I think we were just talking on email. Sorry, Paul, I'm not sure I get that. Asking the question concerning. Oh, I said that you should ask a question. I said I was going to talk about something, Paul, about buying at the open. And now, didn't I talk about it? I think I'm drawing a blank unless I talked about it already. All right, sounds good, Sean. Oh, how I know? Okay, I kind of answered you, but it was kind of quick because we were in the middle of something else. But it was, it's just a fairly common technical pattern. It's called an exhaustion gap, or it's called a novice gap. And again, it's a matter of degree and some subjectivity. But when you have what we call a complete puke out bar, which is what's important, and then you gap in the same direction a large amount. We have the biggest bar on the daily chart in years, and one of the biggest gaps following it. And what that does is it exhausts the selling. And not only exhausts the selling, but also in the case of being in a bull market, it brings in buyers. So you can often get a very powerful reaction to it. It's one of the concepts that's taught. It's taught in the gap class that I teach, the whole concept of professional novice gaps and how to recognize them and how to act on them. Thanks, Jamie. Well, theoretically, TJ, every trend ends from exhaustion or it wouldn't end. The question is if you get a big exhaustion move that makes it obvious, or if you just transition slowly as the buyers slowly overtake the sellers or sellers slowly overtake the buyers. So the answer is by definition, yes, it's always the fact that you ran out of buyers or sellers that ends the trend, right? But what you like to see in an exhaustion move is when it becomes obvious that this is the end of the buying or the end of the selling because of an exhaustion move, and then you can kind of call the top or the bottom. That's what we really wanted to see in the market. We got fairly close to that happening. If we could have run up another month or two at the rate we were going, we would have been in an exhaustion category, and that would have put a top in the market even in the big picture. But now with this happening, it puts a big wrench into it, because now if we do recover and keep going higher, we'll probably keep going higher. I mean, to me, there's two options here that are going to happen. Is we're going to come back up and retest that area and then cave, and this will be a market top, and it's not what I want to see, because it's very hard to manage that one, or to call it properly, or to play it properly in any shape or form. What I'd rather see would be to just blow through this area and keep going higher, and then put in a real exhaustion top. And as I said, I did a little video about the market recently, and as I said in there, and this isn't it, but if we were to hit that exhaustion top, like if we were to turn around, rally, and take out this prior high and keep going for another 2-3 months, that when we do hit a top, I'm here to tell you that you're going to see the biggest bear market you've ever seen in your life, if we approach it from that way. Again, that's not saying now. Now there's a big question mark as to what will happen, but all right, guys, any other questions, anything? Looks like we're done. All right, thanks for being here, guys. And again, if you want to, you want to take a trial of my trading room, we have a lot of fun in there every day. You can just pick that up on the website. Just go to the services page, and you can check that out, how to do that. And if you have any questions, you can feel free to email me. Most of your questions will be answered. The site's pretty well set up and answers most of your questions. You can always email me as well. Thanks, guys. There's the services page, and here's my email. You can find it on the site easy enough, but thanks, guys. Oh, Paul S., I didn't see your comment up there. Your real world practical insights keep me coming back. Most of our members are a waste of time. Oh yeah, no problem. No, well, I look at it this way, Paul. I don't do sales on anything. You've never seen an email from me like, oh, gee, get in this, program right now, or I will never have a sale. I don't want to ever push anybody into taking something. When it was time for me to take a seminar, I would have paid any price for it. The way I look at it is I just think of myself in most of these situations. Before I felt I needed a seminar on learning how to trade, I'm talking 19 years ago, you couldn't have convinced me to take one if it was free or whatever. I wouldn't have done it. And when I realized I needed it, I would have paid any price. And that's the way I look at it is, I try and give you guys real good, honest information, no strings attached. If that pushes somebody over the edge to be successful, great. From my point of view, if it convinces you that there's a lot more to learn, then maybe someday you'll sign up for classes. And that's all it is. I've actually discouraged some people from signing up. I told them I didn't think they were ready. So I'm not here to force you into something. I'm here for when you're ready. I'm here, and come do what you want to do, whether it's be a part of the room or whether it's being in the seminar program. Some people think I'm joking because the price is less and they think that it can't be, but it is. And my commitment is to try and stay with you to get you to learn and understand this. You retake the seminars over and over. We have a practical application review day. You have access to me to send me your trades for comment and your trading plans for comment. And I've had 2-3 people just spur of the moment. I said, let's get in the trading room and do this live because you got to understand this better than what you are. So that's just what I do right now. Yeah, well, that's one way to put it, Paul. I mean, I'm certainly not doing that. No, like I said, I'm just here if you for whatever you need. All right, guys. Looks like we're done. Thanks. We'll see you wherever I see you next. Have a good evening, guys. Take care.